Hi, folks. David Shulin here, welcoming you to another episode of the Chaikin Minute. In today's Chaikin Minute, we are going to discuss the power gauge rating, but specifically, we are going to discuss the neutral plus and neutral minus power gauge ratings. These are different than your very bullish, neutral, bearish, or very bearish ratings. They kind of fall in a separate category. These are stocks that have been modified by a technical indicator, by a breakdown or a breakout above or below a long-term trend line. What do I mean? Well, let's take WRK here, for example. WRK is a neutral plus rated stock, pretty clear and easy to see, right? Either here or wherever. This is neutral plus rated. So what does neutral plus rated mean? Well, let's look a little closer at the individual categories that make up the power gauge rating. When we look at WRK and we look at these four power gauge rating categories, experts, very bullish, technicals and financials, bullish, and earnings, bearish, and we combine them together to get the power gauge rating, guess what we get? We get a bull. Yes. These four categories, excuse me, tell us WRK is a bullish rated stock likely to outperform the market. But obviously, WRK does not have a bullish rating. Now, why is that? Well, while the power gauge rating is primarily fundamental and combines, of course, technical information, some secret sauce with the experts in there as well, we always must respect the technicals. Always. A stock that is trading below its long-term trend line is one we simply cannot call bullish. A stock must be above its long-term trend line for us to say this is a bullish stock likely to outperform in the months ahead. So any stock that closes below its long-term trend line will be clipped to a neutral plus rating, meaning positive potential under the surface. But right now, the market doesn't agree. And if the market doesn't agree, we can also not agree. And therefore, it is neutral plus. If WRK were to close above this 200 double exponential moving average, our long-term trend line, tomorrow you would wake up and see that it has a bullish rating. That is the only thing right now at this moment keeping WRK from being bullish. We can look at other neutral plus stocks and it's exactly the same. UPS, right, would be bullish. Target would be bullish. Target only recently crossed below its long-term trend line. Is it possible that when it moves from oversold toward overbought, it'll cross above it again and become bullish? Sure. Is it possible it stays below? Also possible, right? But all that we would need is a close above the long-term trend line for Target to be rated bullish again. The technicals also matter. The technicals also matter. You could choose to look for neutral plus stocks that are starting to turn back around again, right? A little more risk involved there for sure. But there's opportunity possibly in neutral plus stocks that maybe had been underperforming, maybe had negative money flow, but that has turned around. They've started to outperform again, right? They've started to show positive money flow. Maybe you can find something like that that might be appropriate depending on your personal goals and tolerance for risk. The more conservative side, we'd wait for something to become bullish entirely again. That is our preference, of course, is a bullish rated stock. Now, what about the other side? Yeah, we have neutral minus stocks. Now, neutral minus stocks are not the exact reverse of neutral plus, though conceptually it is the same. ES here is a neutral minus stock that would be bearish. This is a stock that would be bearish, except for the long-term trend line. Now, when it comes to a bearish stock turning neutral minus, not only must the stock closing price be above the long-term trend line, but the long-term trend line must also be rising. So if your stock is above a falling long-term trend line, but above the long-term trend line, but it is falling, it can still and would still be bearish. If it is above a rising long-term trend line, like yes here, it would turn neutral minus. Bank of America, a good example, but guess what? Bank of America yesterday at the close was above a rising long-term trend line. If Bank of America closes at this price by the end of today, tomorrow, this will be bearish. Does that make sense? Right? The only thing keeping Bank of America from a bearish rating is being above a rising long-term trend line. Now, it is always possible that some of the other indicators that make up the power gauge rating could change some of those factors overnight, but more than likely, without a turnaround here by the end of the day today, Bank of America will be bearish tomorrow. Neutral plus and neutral minus, positive potential, market doesn't agree right now. Negative potential, bearish potential, but market likes it at this time. Always a stock to be wary of for negative potential. Hope you've enjoyed today's Chaikin Minute. We'll be back with you again tomorrow.